Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.
Silver is hot and getting hotter, and the project that gave Nevada the Silver State label is piling on the high-grade ounces. Welcome to Kitco Mining with me, Paul Harris, here at the 2025 Precious Metals Summit in Beaver Creek, Colorado. Joining me to tell me more is Andrew Pollard, President and CEO of Blackrock Silver. Andrew, welcome back to Kitco.
Yeah, it's great to be here. Thank you.
You're very much in the news at the moment. Resource update recently, you now have more than 100 million ounces of silver equivalent, including the first indicated resources. What are the significance of those?
Yeah, well, going into this, our resource pronouns were inferred. Now our pronouns are indicated and inferred. So this is a big step for us. The biggest question mark over our project, since we only made our discovery 5 years ago, as we've materially grown the size and scale of it, and last year we put out a PEA on it, but a lot of people didn't believe our ounces were actually as good as they looked. Our PEA, the head grade in there was 55% higher head grade than the next closest silver developer in the world, and people had some skepticism about whether it hung together. So, not wanting to show up to Beaver Creek empty-handed, we put out the first of a double header of resources that we're going to have out in quick succession. The first resource, which we debuted Monday, the 8th, leading into Beaver Creek here, was effectively poised to de-risk our project, convert our ounces through the payback period that was outlined in our PEA. And our PEA, we used $1,900 gold and $23 silver, and that had a 2.3-year payback period. So the big idea for us, the way to quell any question marks about our ability to convert ounces and upgrade the confidence, was to de-risk through that. So we wanted to drill out 1 million to 1.5 million tons. That represents 2 to 3 years. And we ended up putting it out yesterday. We delivered 1.33 million tons at roughly the exact same grade profile that we had. So around a half kilo silver equivalent. And when we put our resources out, we do something that not many other people in the industry do. We do our resources with a diluted grade. A diluted grade means you get a much truer view to the actual grade you're going to get in a mining scenario, whereas most other resources are presented undiluted. So what happens is they've got this really high number, but once they have to factor in the dilution in a mining scenario, you'll see them fall off a cliff. You'll see ones that say they're 500 fall down to like 350. With us, in our last PEA, for example, we said we were 500. We actually went up to 570. In this case, our indicated grade ended up being about 493 grams per ton silver equivalent. And it's just silver and gold in here. But that's going to be a pretty true view to what you're going to see in the actual mining plan. So, there's no other project globally that's development stage and large like this that on an undiluted basis that would be anywhere close to us.
In terms of diluted grade, what mining width do you use for that?
Well, yeah, so our blocks are 1.5 meters, so minimum 1.5 meters vein widths, and then we dilute down. So we got down to, I guess, meter cubes, but ultimately the vein thickness is 1.5 meters, and then you dilute the grades down. So anything that doesn't make the cutoff, and our cutoff is 180 grams over that 1.5 meters, doesn't get in there.
Now, you mentioned a two-phase, you're going to do 2 phases of resource update. And I imagine that you're going to answer my next question then, because the market perhaps didn't respond well to the resource yesterday. You were down 10%. And is that perhaps because a lot of people weren't expecting that there's the second resource update coming very soon?
Yeah, well, Paul, context is everything. So leading up to this resource, we've 3x'd in valuation in the last 3 months. So in April, we were on 26 cents. When I think last week we closed around 75 cents on huge volume and a lot of interest. And then, we sold off 10%. So we went up 300% and we lost 10. It's a buy the rumor, sell the news sort of thing. Obviously people always want bigger and better, but it was clearly stated that this is a conversion resource and you can only convert what you have to convert. And we actually, laid out in every single news release, our goal is to de-risk through the payback period, 1.5 million tons, 2 to 3 years of production. We effectively drilled out 2.5. Keep in mind that payback period was also based on $1,900 gold and $23 silver. That payback period's compressed substantially.
Couple of weeks now.
Yeah, so the big thing with this one is we've greenlit where we're going full throttle towards de-risking and moving forward on all the permitting initiatives because, yeah, it's going to be a no-brainer to break ground. And in the interim, while we're getting all of that optimization of a decline in the early years and all the permitting initiatives, the environmental data collection, we're focused on adding mine life on the back end, and that's what our next resource in September. So it's a 1-2 punch. Increase the confidence of the deposit, show the market we can meaningfully convert, and we did, and then obviously scale. Obviously more is better, and that's the goal.
Well, you put out let's say 100 million ounces of silver equivalent at 5 or 6 million ounces a year of production. That's roughly 20 years of production. How much further do you think you can grow the deposit?
Well, our last PEA had 8.6 million annually production, so that production profile is very similar to what Silvercrest had with Las Chispas. They were, their first year of commercial, they did about 8 million ounces. Their second year, they did 10. In our last mine plan, which this resource is still largely based off of because, all we did was just de-risk the initial years. We're doing, I think it's around 8 million the first year and 11 million the second year. So very similar production profiles there. And what's important about that is that's obviously something that will move the needle for the large caps because guess what? They got taken out. In terms of cash costs, we're selling 8.6 million units of anything. I don't care if it's silver equivalent or widgets at costs of under $12, all-in sustaining costs of under $12. You got one heck of a business. I mean, people are talking about $50 silver or $100 silver or $5,000 gold. I don't need that. Our project works at $15 silver. If you look at just this indicated resource that we put out, our silver grade at 215 and our gold grade at, what was it? It was like 250 to 2.5. Both independently are above our cutoff grade for the project, which means one of these commodities more than pays the bills and the other you're getting a free ride on. You're producing at negative cash costs.
You got a lot of ounces, you got a lot of grade. PEA last year, which would make Tonopah West one of the biggest silver mines in the world. When are we going to see an update on the economics?
Yeah, so once we get this next resource out, so we've got our conversion done, our next one's going to be focused on blowing out the mine life. Right now it's at about 8 years. We think we can get it to 10, 11, 12 or beyond, or potentially, depending on how well this expansion drilling goes. We've got 22 drill holes in the lab right now, which are testing a 1.2 kilometer strike extension. If that goes really well, we might even look at increasing the throughput, which would increase the production profile and probably decrease the cost. So, the goal is to get to 10 to 12 years based off of this, and then if we get much bigger than that and is technically feasible, we might look at scaling that up even further. But it's so that'll be coming down end of Q1, early Q2 would be that PEA.
And what sort of price deck are you thinking of for the PEA update? Are you thinking of using a similar price deck so you can do very much an apples-to-apples comparison, or are you going to try and incorporate some? I
don't think we'll use $1,900 as the base case. I think we'd get left out of, at a certain point you can be too conservative or it's not even useful. Our upside case on that last PEA was at 2280 and 2280 gold and 2760 silver, and now everyone's saying, why didn't you do 3,000? It's like it didn't seem feasible last year.
So, what are you going to aim at?
Typically for economics like that, you do the 3-year prevailing average for the various commodities. So I don't know. I've seen recently companies use, I saw one company the other day use like $3,200 gold and $33. So we're not going to do that, but it's all a function of what the QPs want to do at that time. We'll see.
I like your corporate presentation because you're one of the few companies that actually has a picture of printing money in it, to indicate what you make.
It's a gold. I mean, we're talking about a literal gold mine here, right?
No, silver's at $41 per ounce. Given the run-up in your share price, is there the temptation to do a fundraise, raise a lot more money to have all the money you need to get through perhaps to even a production decision?
No, we're in the best position I think we've been from a corporate perspective in years because of our recent run on substantial volume. We've seen a lot of money come in the door, just between mid-July and September, $4.2 million. Then I put that news release out.
That's warrants being exercised.
Yeah, that's warrants being exercised. And then we had another probably 500,000 come in that day that announcement came out. And since then, we've traded, we traded 6 million shares today. We traded 4 million shares yesterday. I don't know what's come in the door, but I surmise potentially a lot of this volatility has just been people pounding out warrants, because we've got something like $20 million of in-the-money warrants remaining at significantly lower prices than we're at now. So, I don't necessarily like it, the volatility, but at the same time, I get it, and we're going to be stronger at the back end. And it's the 9th of September today that we're doing this. We've already traded 22 million shares. The 1st of September was a holiday. This is going to be our biggest month ever, and these are a lot of people. That's 22 million buyers. So there's a lot of sellers who might have bought lower. Some might have wanted a bigger resource or something different or whatever. Every day people make buying and selling decisions. But what I know is 22 million shares have been bought in the mid to high 60s and 70s at this level. And I think it's going to be a very fierce end to the year with all the expansion drilling, the resource PEA and permits.
With the increase in your share price and market capitalization, does that get you into indexes and therefore the potential additional buying from that source as well?
Yeah, we were included in the SIL ETF, so the Global X Silver Miners Index, in their last rebalance in May. They started, I think, with about 6.5 million shares. Now they rebalance daily, so they're now up to 8.8 million shares in us. The SIL-J rebalance, that's coming up in mid to late September. We're not in there yet. I think given our market cap, our liquidity, and our resource, I think we're certainly on deck. I don't know, but if that happens, that could also be quite good. And it's sort of blue ocean.
Okay. Now, you mentioned the Las Chispas mine, which was acquired recently. There've been, in the last 18 months or so, 3 mines acquired for an aggregate of $5 billion, more or less, in M&A transactions. Primary silver deposits are very rare. There's not many of them around. What does that potentially portend for the future of Blackrock Silver, and where do you want to go with that?
Well, I think it shows that we're at a very key inflection point for the market. In the last 4 or 5 years, you weren't seeing premium takeouts for developers. Too many mistakes were made in the 2010s and the mid-2000s where companies were overpaying for exploration assets or was super frothy, bidding things up, and then they couldn't execute. And then they'd end up having to write them down to nothing. So in the last cycle, Silvercrest, Mag, Gatos, everyone with something actually had to get it to commercial production, maybe even year 2 of commercial production, and then these companies are buying cash flow. Well, all of the high-margin single-asset producers are really fallen by the wayside. A new cohort of what were smaller-scale, less economically robust projects are now also getting frothy just because $40 silver captures a lot of attention. But all of the big production profile projects that are in production that were making money are now gone. Now silver's looking good, gold's looking good. It seems like we got in the inner innings of a bull market here. Yeah, the next shoe to drop is going to be the developers. And what's nice about being in the silver industry is that really there's only about 4 or 5 development stage projects of gravitas globally that matter. And we're, easily the highest grade, easily the best jurisdiction, private land in Nevada, clear permitting path, straightforward metallurgy. Every analyst that covers us, in fact, Raymond James initiated coverage on us the same week that Silvercrest got sold, and they said Silvercrest is gone by Blackrock Silver, and they laid out all of these analogs between our deposit and mineralization and theirs, and they said this is the closest thing to that, and for 1/10 the price.
Now, if a buyout is something you do want and your shareholders want, in the context of the 3 transactions you mentioned, and you pointed out that all of them got into commercial production before the acquisition came. Do you see that as something you're going to have to do to get the acquisition, the bid coming in?
Well, the company that breaks ground on this is a very different company that's sitting before you today, because it's going to be one with a lot more ounces, a lot more higher confidence ounces. It's going to have a permit, and it's going to have a substantially higher valuation. That company's still going to be BlackRock. It's just give me a year and we're going to get there. we think we can have everything we need done at the surface by this time next year, permits in hand by the end of the year to break ground. Now, that might be the sweet spot for a large company to buy us before we break ground, because in a typical market, operators typically want to put their own stance, their own fingerprints on something before I mess it up. Well, if we get there, we're obviously going to build our own team of operators and do it our way, but there is sort of an allure for a company to come in and right size before you break ground, before you get your permits sorted, before you do this. So we're right in a sweet spot. What I can say from all of the conversations we've had since we started hitting some critical mass earlier this year amongst the corporates is everyone was waiting to see if it hung together. We proved yesterday that it did.
There are other things in the overall environment that are looking very positive for a company looking to develop a project in Nevada. The current US administration wants to reduce permitting times. It wants more mining. It wants the job creation. It's using the Fast 41 mechanism to coordinate amongst federal agencies. You're on sort of private land, so some of that doesn't really apply to you. More recently, silver is now on the critical minerals list. What kind of opportunities does that provide potentially for Blackrock Silver?
It seems like every single agency down there, whether they're federal or state or county, have seemed to have gotten a memo that they want to be builders and developers and create jobs, and they're getting out of the way. So we are on private land, and private land is a great setup because we don't really have any federal government oversight. It is just the state and county regulators. But the state and the county are known for developing and operating mines, so they know what they're doing, and we're looking at a very expedited path there. The critical minerals aspect is very interesting because the U.S., they're setting up effectively their own sovereign wealth fund where they're going to be, one, trying to support developers like us with construction financing. You've seen there, it's called the EXIM Bank, the Export-Import Bank, Exmin. They've been putting out LOIs probably every other week, large ones. Even Friedland took them up on one for Ivanhoe Electric. You're seeing with the critical nature, with our project being both gold and silver, both of which are critical minerals, there's a good chance those might be able to get some tax incentives. That's another aspect of it, which would also be great. But ultimately, permitting was one of those things that we always did. That there's a lot of things that can keep you up at night with projects, and that's always been one of the best things about the project. This thing's fast track. The first drill hole ever into the project was in June of 2020. We're talking about breaking ground on this thing by 2027. Whether it's me or whether someone buys us to build it, I expect this will be full-scale commercial production by 2030. Pumping out, jogging domestic silver production in America by 12 to 15%, if not more.
Okay, we've covered a lot of ground in this conversation, Andrew, so maybe let's just end with a recap of what you think are going to be some of the main catalysts for the company over the next 12 months or so.
Yeah, well, I think one is prominence. There's just not any project like this out there. Grade profile, there's nothing. You're 50% higher diluted grade than just about anyone. It's getting permitted as we speak. It's going to grow substantially, so we've increased the confidence in the ounces. We've shown the market that we're meaningfully able to convert. The grade profile stays strong. We're going to be adding a lot more ounces. And ultimately, this thing's going to be leapfrogging over a lot of other companies because this is something that's going to get developed quickly. We're not a mineral inventory play. I'm not just stacking up ounces, drilling random targets. Every single ounce we're adding is going to bolt onto the existing mine plan and be incredibly accretive. And at the grade profile we have, even if we didn't add another ounce, we'd push the button tomorrow. But it's going to get a lot bigger, and you measure twice, cut once, right? So, give me another year on this, and I think we're all going to be pretty happy.
Okay, well, congratulations on a very successful year so far. Andrew Pollard, thank you very much for joining us today.
Thank you very much, too.
And we have a lot more to come from the 2025 Precious Metals Summit here in Beaver Creek, so stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.